Welcome to another episode of ETF 360. I'm Tom Lydon, along with our Director of Research, Dave Nadig, and a special guest, Sarah Kjellberg, who's head of U.S. iShares Sustainable ETFs at BlackRock. So, Sarah, we continue to see strong momentum with ESG and sustainable investing across the industry. I mean, it's hotter than ever. What have some of the key developments been, let's just say, in climate?
Yeah, I mean, I would just say broadly speaking, there's really a number of major tailwinds that's really driving the shift to sustainable investing. So technological innovation, certainly changes we're seeing in demographics, increased regulations globally, and really this evolving view around risks. And so, some of the developments that we've seen include flows, right? I know this is a story that you've heard before, but we're continuing to see these record flows. The second is around product availability. So 400 sustainable ETFs and mutual funds available today, 22 new ETFs that were just launched so far this year. And we're seeing more and more wealth firms placing priority around sustainable product approvals and in models, which is really leading to greater kind of access and choice for advisors and all investors. And finally, as you mentioned, Tom, this greater focus on climate. So a dramatic acceleration, right? As you think about net zero commitments, 100 governments, over 1,000 companies that are really pledging to net zero, including BlackRock earlier this year. And, if you take a step back and think about it's going to take an estimated 50 to 100 trillion in capital investments to really transition to a low carbon economy.
So, Sarah, you guys were early in the climate space. It's been a big part of your investing ethos for a while. What's new there? What's changed in how investors are actually integrating climate awareness into their portfolios?
Sure. So actually this year, BlackRock actually integrated climate risks within our capital market assumptions for the first time. So, while we're seeing institutions in the world, take pretty significant action to address climate risk, we're just now starting to see advisors really integrate those climate considerations, and they really look at it in a few ways. And so the first is, I would say kind of more broadly as ESG within core allocations. So, advisors are starting to think about moving out of, let's say, kind of traditional market cap weighted exposures, and then moving into ESG ETFs that still continue to provide the broad market exposures while also achieving a more sustainable outcome. And so if you even take a look at some of our ESG suites, so Aware or Advanced, what you're seeing is really kind of this reduction of carbon intensity anywhere, a range from 35 to 60%. And then, tactical allocation to themes. And so this is generally what I think investors kind of think about in sustainable when it comes to ETFs, but looking at themes like clean energy, certainly, electric vehicles that are getting support from both the public and the private sector. And, something that we've noticed more recently is we're seeing some of, especially the larger wealth teams, really embracing this concept of kind of the future portfolio, which is really kind of this combination of thematic or megatrend ETFs alongside ESG.
Sarah, you launched a couple low carbon ETFs. Tell us a little bit about them quickly, if you would. And if we lifted up the hood, what will we see inside?
Sure. So we launched LCTU and LCTD in April, and these are low carbon transition ETFs. And this is really what I would say is an example of BlackRock's commitment. And it was having this opportunity to be able to partner with one of the largest pensions in the world, CalSTRS, as well as 8 other asset owners, to be able to execute on a shared vision, to invest in this transition to a low carbon economy and really make this strategy, again, kind of available to all investors. And so the low carbon transition readiness ETFs are unique in that they seek to capture both the risks as well as the opportunities that are associated with this long-term transition in one strategy. And so it's run by BlackRock's sustainable investing team. And what they do is they leverage, unstructured, and structured data sources, as well as advanced analytics, research-driven insights across 5 key pillars, looking at core business involvement like fossil fuels and clean tech, as well as natural resource management across energy, water, and waste. And what we're seeking to do is really measure a company's exposure and their management to climate transition. And so the portfolios will kind of tilt towards those companies that are going to be better positioned. So in terms of how to think about it within a portfolio, these strategies are transparent, active ETFs. They're optimized to be able to minimize really the deviation away from the benchmarks, the Russell 1000, as well as the MSCI World ex-US. So they're broadly diversified, they're sector neutral, and they can be considered core exposures in both the US as well as the international developed allocations within a portfolio.
You know, I'll tell you, Dave, I bought a 1980 Jeep, and I'm stopping by the gas station more than I'd like to. And I'm feeling obligated to not only buy these ETFs, but some carbon credits to go along with it.
You know, you could have just followed me and gotten a Tesla, and then you'd be all set.
That my wife's doing that, so we're kind of balanced out there. I don't know, Sarah. What do you
gas
got?
guzzler and Tesla? I'm not sure that it balances out into the middle. That doesn't sound like a valid strategy to me.
Oh man. Well, Tom, I gotta tell you, I got to play the part. So I actually did buy a Tesla.
You
Yes,
did.
and
Okay.
love it. And in fact, we're actually thinking about getting rid of our other gas guzzler and getting a second Tesla.
Listen, I know we're having fun joking, but it's really feeling good with this momentum and everything that's going on. So, Sarah, thanks for being with us, and hope to have you back on ETF 360 again.